To make consistent money trading the markets, you need to know how to read crowd psychology. And today I'm going to share with you my best tool, which is a leading indicator. It's Elliott waves. I'm going to show you how to apply Elliott waves, the basic principles, the foundation, so you can see what's likely to happen next in the price action, so you know when to buy, when to sell, and when to just stand aside. So if you like today's video, like, subscribe, hit the bell notification. Let's dive straight into how to apply Elliott waves to TradingView. So TradingView is the main software that I use to get the price data. So we're going to break some of this down in terms of, at the moment, it's just bars. We're looking at an Ethereum chart. Don't worry about the chart itself or what cryptocurrency is right now. The main thing is we see some pattern movements up and down. We want to make sense of this. We want to go, where is buying happening and where's more buying likely to occur? In other words, price going up. Where is selling happening and when is more selling likely to occur? And we can plan, prepare, and anticipate. So just a couple of quick things. The basic principle of Elliott waves is markets are driven by fear and greed, right? This was discovered in the 1800s, 1900s, and it's probably the best underutilized tool that I've ever come across. Either people just don't get it, they overcomplicate it, whatever it is. I'm telling you, if you understand what I'm going to share with you today, you'll just be on a different level. So markets move in fives, 1, 2, 3, 4, 5, and usually threes. This is the most common pattern, and then the pattern repeats itself. This is for a bull market, right? And that's what we're going to draw today. But just know everything that I'm going to cover today is also true for a bear market. You also have conditions where the market moves in fives on the downside, threes on the upside, and then a continuation to the downside. There are some instances that we're going to draw this as well. On this actual chart, we're going to do something called 2 degrees of counts. So we're going to cover the practical on how to, but it's also more important to know why. Why would we bother wasting our time learning Elliott waves, applying it to our chart? Basically, we want to make more money. That's what we want to do, right? We want to make more money, lock in profits. And if the chart patterns can tell us something in advance, we can prepare to take profits. We can prepare to buy. We can prepare to sell. And there'll be other times where it's like, look, the psychology is not clear. Let's just stand aside. So I'm just going to draw it roughly on here. And then I'm going to show you how to use the tools on TradingView so you can draw it onto the chart. And by the way, if you want to learn how to do Elliott waves, I cover something called the 4 secrets. I want you as one of my students, and an easy way to just test out my teachings, other than this very video itself, is actually to check out my 4 secrets masterclass. One of the secrets is Elliott wave pattern recognition, how to read crowd psychology. And if you like it, you can buy my courses. You can join my private Telegram community. We do weekend workshops, and we do this analysis live, and we've got all types of products, which I think you'll love. But this is the gateway if you want to work closer with me. So, and that's free, by the way, it's in the description link below. So we're just going to draw this first, right? So we're looking at this price action. So this whole price action over here, this is what we're looking at. Do you see any 5s and 3s, right? So your first job is to identify. Now, we don't need to overcomplicate things, right? We don't need to overcomplicate things. All we want to see is there a basic 5 and a 3 that's standing out? And what you can do to help you, because everything is difficult before it's easy. So when people are first looking at charts, it just looks like noise. But when you are going to see what we're about to do, you're going to see the markets through a new lens. You're going to see buying behavior and selling behavior. So at the top over here, we got bars. So we got it set in as a bar chart at the moment, where we've got bars. But if I click on this, it's called line data. It just takes the closing price. Sometimes it's easier to see visually. So you just set it whatever suits you best. You also have candlesticks, which is another option. Some people prefer candlesticks. There's pros and cons to each. I like to keep it relatively simple and keep it on bars, but just choose whichever one that suits you best. So then we're just going to look at this. I'm just going to express my thinking, and I'm looking at this chart, and what I'm seeing is we got this initial move up. Looks like a wave 1. We've got an initial move down. Looks like a wave 2. We got this high over here and then this correction over here. So this looks like a nice wave 3. Looks like a nice wave 4. And then a nice wave 5. Now, as the price is unfolding live, and let's just say we was at this point in the market and we didn't have all of this to date, What this tells us over here is we got a 1, what looks like a 2, 3, we got this 4. And when we see a 5 wave occurring or a 5th wave occurring in this zone over here, what it tells us is that the market is getting overheated, overvalued, and some selling's probably going to come into the market. And then that's why we had this correction, right? This is the value of Elliott wave. It allows you to see the future. It's the closest thing that you're ever going to get to a crystal ball, right? A crystal ball. And Elliott wave is very, very powerful. Now, do you see any 3-wave patterns? So we got this, what looks like to be, again, we're going to draw this in a bit more detail using the software, but I just want to get the thinking across first so you understand the power of it. Well, in this section now, let's just change the color. Let's do it in green. Do you see any 3-wave counts on the downside? Remembering that most markets move in 5s and 3s. So you probably spotted it, right? You probably spotted it. It's pretty clear. It's pretty textbook. And we did quite well on this. And we're still watching this particular market. We can move to a line chart to make it easier. Do you see any patterns? Well, what I see, what stands out to me, because I've been doing this for 15 years, and I think it's just the best thing. It fascinates me that the markets apply this crowd psychology. We've got this initial move down. We got this correction. And then this third move down, right? So that's what we call an A, B, C. And then look how it's reacted. Like recently, it's just reacted nicely and it's starting to move to the upside. And what typically happens, like we said at the beginning, after a 5-wave up, 1, 2, 3, 4, 5, and a correction A, B, C, after this is complete, what typically occurs is a continuation to new highs. So we anticipate on Ethereum over here, movements to new highs over the coming weeks and months. So now let's use TradingView. So this is the software. You can get different memberships and whatnot. There's a free version also. It can be really useful because you can draw your thinking onto the chart and then it will save it. So then you don't have to keep redoing it every single time. So on the left-hand side, we've got this bar. We're going to go to the 1, 2, 3, 4, 5, 6 one down, and it's called patterns. Press the arrow on the side and you'll get a drop down. Now my face is currently covering where it says Elliott waves, but I've got it on this bar over here because what TradingView allows you to do is it allows you to put a star and save it onto a bar like this. So it's like a quick access bar. And the ones that we're going to use is this one over here, where it's got the numbers 1 and 5. In other words, it's a count of a 1, 2, 5, and it's called Elliott Impulse Wave. And we're also going to use this one here, Elliott Correction Wave, which is the typical ABC. These are the two most common pattern sequences that you'll see. Now, I've heard people talk about Elliott waves before, and what annoys me is maybe the way they were introduced to it wasn't great. So some people miss the value or they overcomplicate things because you can get very academic with this. I don't care about academia in the sense of Elliott waves. I want to make money. How can this information help me make money? Tell me when to buy and when to sell, right? And this is what we're looking at, when to buy and when to sell. And this can be a really great tool in addition to whatever you currently use. If you're using certain indicators, if you're using certain pattern positions, this will be an extra addition to get something called confluence of events, which basically is more information telling you the same thing. So what we're going to do, we're going to do 2 degrees of count. And this will make sense because what you want to be aware of is when we see, let's just call it a 1, 2, 3, 4, 5. I'm just drawing it like this. This wave, the 1, 2, the 1, 3, and the 5, they will also tend to break down in a lower degree. You kind of have to zoom in a bit more. This whole wave 5 will tend to break down into a 1, 2, 3, 4, 5 in itself. This 3 would also tend to break down to a 5-wave sequence in itself. And this can be really, really useful. And I'm going to show you why. And we're going to do some of that in just a second. So let's just do the macro wave count. It's the biggest wave count that we can see on the highest degree. So let me just make that crystal clear because it's really, really important. So this is the one movement to the upside. So we can see there's been a nice movement to the upside. And we would actually call that a wave 1, the first movement to the upside. We don't need to draw it in right now, but that's the first move. But we want to see, does that first move break down to a 5-wave sequence? And here it does, very, very nicely. There's a couple of ways you can do this, but the most obvious is this wave 1, wave 2, we got this nice wave 3, wave 4, wave 5. So we've now used TradingView to draw this on. Now what you can do with this, if you just double click on this or this cog up here, you'll see these settings pop up. And what you can do is you can change the color to suit you. And remember, this is just here to serve you of getting your thinking expressed onto the chart. You can save it, so when you look at it the next time, you know where you left off. You can change the thickness of the line, but the main one I want to focus on is the degree of counts. Now, there's a primary count, intermediate, micro. Basically, there's a lot. Basically, you can go to how many levels here? It's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15 degrees of counts. In other words, waves within the waves within the waves. You only really need 2, maximum 3 for it to be useful and practical. So what we're going to use for our larger degree count is we're going to use the intermediate. We'll keep the larger degree blue because we're going to do one more wave count. We're going to change the color so we can really differentiate between the two. And then once we're happy with it, we just click OK. So now we've got our wave count on the chart. It tells us, so if I just show it to you like this, and I'll just take the data back over here. If this was live and we saw a nice 5-wave sequence like this, a nice 1, 2, 3, 4, and what looks like a 5 forming, as this high gets exceeded, I'm just showing you the practical use of this. This is how I use it. You know, we're not trying to be right or wrong. We're trying to make money. As the market moves further up, we go, okay, this is very helpful for me to see, okay, it looks like we've gone above the wave 3. This confirms a wave 4, and we're coming towards what looks like to be a wave 5. We can use some other things as well, like momentum, price, time. They're the main factors that I use to really narrow this down. But Elliott wave pattern position gives me an advanced warning saying, yeah, high alert. If you're long, look to be taking profits. Look to be expecting a correction of some sort, some type of pullback. Why? Because there's a clear 5-wave buying behavior. It's crowd psychology. The 5th wave is normally a hopium wave where people are FOMOing in, fear of missing out, and they're panic buying. Sometimes the wave 5s can be overextended. And I go, okay, I'm waiting for a correction now. I'm waiting for a correction. And more often than not, it will apply. It doesn't mean it's going to apply. The market's always nothing. But this is the practical use of Elliott waves. And by the way, if you want to know how to combine the other elements and you want to become one of my students and work closer with me, you can now test me out. Check it out. The 4 Secrets is a free masterclass. The 4 Secrets you must know to make money trading the markets. And it's for real. It's the best. I've spent 15 years really looking for the best tools. And there's thousands of tools. God, geez. It's so difficult there's just so many. There's so many. And I just focus on the 20% that's going to give me the 80% results. And what I'm sharing with you is the best of the best that I've found over a decade's worth of searching. So there's no really need to reinvent the wheel. Let's just apply what already works. All right, so let's just now go back over here. So I'm happy with this. So let's just say we're happy with this wave count. 1, 2, 3, 4, 5. And now, do you see an A, B, C? Well, we already identified that before. So let's just now draw it on. So we click on this Elliott correction wave. And we're going to click on the top, bottom, top, bottom. Now, initially, just to be transparent, when I was doing my analysis weeks ago, this looked like the end of a wave C, like here. And you'll often see me put in a question mark to say, right, looks like an end of a wave C. We're looking for long trade setups. And at this point, this looked like the textbook ABC correction. And so it was like thumbs up. Everything's hanging together. It was pattern, price, momentum, X, Y, Z. However, the way the market responded over the coming days, it showed some type of correction in this sense. And then it made one more new low. And when it made this new low over here, I had to reevaluate. And that's just the nature of Elliott waves. One of the things that people find difficult because people hate being wrong. It's not about being right or wrong. It's to look at the crowd psychology. When I saw this buying and selling behavior being overlapping waves, it's like when you see this and it doesn't take off, it's likely we're going to get one more low. We got this low, and then I had to reevaluate. You go, okay, we got a new low. So now this looks like the end of wave C. Hasn't been confirmed, but now this is the active wave count. We had a nice response to it. And then the second time, it did take off, right? And this is where the price is right now. And that's just the nature of reading crowd psychology using Elliott waves. So now we can now remove this question mark because that's pretty much confirmed, because this high over here has been exceeded. This high over here has been exceeded with confidence, and that's a really strong signal that this wave C low is going to hold. Doesn't mean it is going to hold, it just means it's highly likely. So now that was our first degree of wave count. So we've got that. That's very useful for us to help us see what the market's going to do. Because if this wave C at the bottom holds, what it means is there's a very high probability that we're going to see, if I just get rid of this, we're going to see the price over the coming months continue to above this high, right? That's what I'm really getting across. So we're now only looking for long trade setups because the movement is to the upside, and there's particular ways of measuring what the next price target is. I did a video on this a few weeks ago. It's called price extensions. I'm not going to cover that today. So now we're just going to focus. We're going to finish up on different degrees of counts. I'm going to show you two, right? Two in this section. But the main premise is when we're looking at, let's just call it this wave 3. The wave 3 itself will tend to break down into a 5-wave sequence. And on a daily chart, sometimes it's really clear, sometimes it's not. And if it's not, you can drop down to a lower degree time frame, which is like an hourly chart or a 4-hour chart, where the wave structure becomes even clearer. So what we want to look at is between here and here, is there any clear wave structure? Can you see in this price action here, a 5-wave price structure? Now, I'm just going to click on the bar chart just to make it even clearer. Sometimes it's clearer, sometimes it's not. See if you can pause the video and just draw it out for a second, see what you see. So what I see is the market went up, came down, it went up very impulsive, came down, and went up again, right? You see that? How fascinating is that? Buying and selling behavior, a wave 5 of a wave 3. So we got this first move, second move, third move, fourth move, and fifth move. And the way you would say this, like if I was saying it in a sentence, this is forming a wave 5 of a wave 3, right? This is what we mean by 2 degrees of wave count. There's psychology within the psychology, right? There's buying and selling behavior on the macro and the intermediate and the micro, right? So now let's just use TradingView to draw this out. So if I just click on the same tool, Elliott Wave Impulse or Elliott Impulse Wave, I will draw this out. This is 1, 2, 3, 4, and then 5. You'll see it overlaps. So you can just move the other one a bit higher so it looks like this. Now, because they're both the same color and currently denoted in the same degree of wave count, we want to change that. So if I just double click on this and let's just make it red. It doesn't matter what color it is. It's easier if you just make it a different color. So it's just easier to see. And then intermediate, we want to, because it's a wave count of a smaller degree, we just want to take a smaller degree. So the most obvious one would be a minor, as in it just needs to look different. So now when I'm looking at it, I can visually, how would you use this in a practical sense? The practical use of this would be, let's just say we bought down here. We managed to buy here. And then we saw the market moving up to a wave 3, but then we saw it breaking down to a 1, 2, 3, 4, and then we saw this. Now, we don't know how big the wave 4 correction is going to be. There's some typical wave 4 selling behavior is a profit-taking wave. There's like 38.2 to 50% is most common, but you might want to take profits at this point over here for a few different reasons. So now we've got a wave 5 of a wave 3. We go, okay, do we want to hold through a wave 4? There's pros and cons, but you can make a decision. You might say, yes, I want to hold through a wave 4 because of these reasons. Or there'll be other times you go, no way do I want to hold a wave 4 because it might be a big wave 4. And therefore you want to be out of the market, wait for a wave 4 to complete, and then buy again on a wave 5. So that's how you'll use these 2 degrees of wave counts to make more money. All right, makes sense? That makes sense, right? Hopefully it makes sense. I try and simplify these things, and it's why I got the 4 Secrets masterclass. I'm telling you, it's my best work to go, look, trust me, guys, this is the bee's knees. There's a lot of noise out there. People pay way too much attention to fundamentals when they're looking at price action, and most people are looking to just buy low, sell high. I'm telling you, it'll take your trading to the next level, and I'll show you Elliott waves and how to then add some of the other elements to help you do not only the wave count, but to see what's very likely to occur next. This is free, but really I've designed this. Why I've made it free is so you can check out my teachings, my training. I'm a teacher by trade. I used to be a math teacher back in 2007, teaching kids mathematics. And my superpower is really simplifying things. And this is a complex area, but we've simplified it to a point that is practical. So check it out. It's free. If you like it, buy my course and join my private community. And I'll take you over the coming weeks, months, and years, I'll take you to the next level. All right, so now we're going to just finish up. Let's just get back to all the data. I'm just going to finish up one more thing. We're not going to break down everything into sub-degrees of waves because I want to really just get across the principle. I'm just going to show you one more thing. I'm going to do it over here. I'm going to use this part. We're going to look at this part here. This wave B, most wave Bs break down to a 3-wave structure. So a wave B typically actually breaks down to an ABC structure in itself, right? And this we actually use to help us short the market, where you can make money on the market moving down. So do you see a 3-wave structure in this element over here, right? And we can make it even more precise. We can even take the data back, because this is what we did live, right? And we did this live on YouTube as well. We did some YouTube content on this, but we use this information. So can you see any price pattern that would reflect a 3-wave structure? We click on bars to see if it's any. It's probably not more useful in this case. We click on candlesticks, might make it more useful. I like to use bars. So what I see here, and this was just textbook. We got this initial move up. We got this initial move down. And then we got this next move up. Right? That's what you call a textbook ABC. So we got this. I will actually show you this. I'll show it to you just quickly. I'm not going to draw it on with TradingView. But what was very valuable to me was this displayed a 1, 2, 3, 4, 5. Why is that valuable in Elliott wave terms? Well, the correction doesn't finish in a 5-wave structure. So when I see a 5-wave structure like this, by the way, I cover this in great depth in my courses, foundation, intermediate, advanced. I'll break this down. So I'm covering, so don't worry if it goes a bit over your head. 3, 4, 5. When I saw this, I went, okay, this is not likely to be the end of a correction. And now I'm actually anticipating an ABC and waiting for it. And my language in my mind is, if I see an ABC correction, I will look for shorting opportunities, right? That's what we're looking for. So when we're looking at this, to use the tools again, it's the Elliott correction wave. So ABC is the most common. We click this low, this high, this low, and this high. And now what we want to do is we want to keep this degree of count the same color and the same degree as we did on this one. So we can just double check. It's red and it's minor, right? It's the minor. Yeah, just so we know it's of the same degree. This is important because this can be quite confusing when people look at different degrees. Is knowing that this degree of wave count in the red is actually the same as what we're doing over here. But if we have them different colors and different size lettering, it can become a bit confusing. So let's just keep it really simple. Change it to red, change it to minor, and now it's easier to spot. So now, what do we have? Let's just do it like so. When I was looking at this, how do we use this? How do we make money from this? I use momentum. Basically, I used the 4 secrets. I used the 4 secrets to look at this. And I said, okay, this looks like an A, B, C of a B. So that's how you would say it in a sentence. There's a ABC correction. So this becomes a wave C of a wave B. Right? That's how you would like say it if you're writing it down, or you're talking. If you're talking to me in Elliott wave terms, and you said, Chigea, I think this is a wave C of a wave B. All right, what typically happens after a wave C of a wave B, or normally the next larger degree wave C is what we're anticipating. We had an entry strategy, tight entry, And then what happened with the market? And the Elliott wave was massive in this. I couldn't have done it without Elliott wave. And then the market moved nicely in our direction. Right? We made some good profits on the way down. So there you have it. So that was the how to use Elliott waves. It's on TradingView. If I just update this, but you can see how powerful it was with us doing our analysis. A big contribution of one of the 4 secrets, because Ethereum has responded. Like, it's responded really well down here. You can see it's held down here, and this is likely to hold. And this low is probably going to hold for a number of weeks, if not months. Like, this could be the next bull run for Ethereum based on the buying and selling behavior. I'm going to confess to you, when it comes to news, other than now really CPIs that I'm paying attention to because the markets tend to reverse on the announcements of CPIs, I'm doing this. I don't care what people think, what they say. The psychology, everything is baked into the psychology, and Elliott wave will allow you to read the psychology and the crowd psychology. So on the left-hand side, there's a pattern tab, and you have a list of different things. And the 2 main ones that you want is Elliott impulse wave and Elliott correction wave. So check out my 4 secrets, because one of the secrets is Elliott wave, and I cover some more stuff in there on how you can utilize it. And then it's just about practice. And I'm encouraging you to join my private community if you're serious about making money. There's a lot of noise out there. I'm going to show you how to anticipate the market, and there's different ways of using these strategies, and just to really leverage, because I think we're going to have a phenomenal bull run over the coming months and years, and there's going to be a lot of opportunity. But your job is to anticipate what's likely to happen. So you know when to take profits, when to buy, when to sell, when to stand aside, and when to go, look, there's no clear psychology here. Let me look at something else. And then we just look to leverage that information. All right, let's finish on a quote from my book. It's really relevant. You can download this for free as well. It's in the description link as well. Some serious gems in this book. But I start every chapter with a quote. And chapter 5, the chapter's name is It's Simple. And it's a Leonardo da Vinci quote. And he says, simplicity is the ultimate sophistication. Now, when I was learning Elliott waves, oh Lord, like if you read a book on Elliott waves, it can be so academic. It's like you're doing a degree in Elliott waves, and it can bamboozle your mind because of the way people are breaking it down, and it gets very pedantic or anal. It's over analysis. What I like to do is simplify the heck out of it, because it is a sophisticated tool, but you can get paralysis by over analysis. So we want to just stand back and go, is there any practical information on the chart that can help us make money? If yes, we use it. If no, we don't use it. So you never force a wave count. So some people think every chart should have a clear 5 and 3 wave structure. That's not the case. Sometimes there's not a clear wave count. And if there's not a clear wave count, you just go, right, there's not a clear wave count. I can use Elliott wave rules and guidelines, because the rules and guidelines that tell me information, but there might not be a clear 5-wave structure and so on and so forth. But I cover that in my course as well. So if you like today's video, like, subscribe, hit the bell notification, share this video with your friends that are investing, because they won't know about Elliott waves and how you can have a leading indicator that shows you what's very likely to occur in the very near future. So you know when to buy, when to sell, and when to stand aside. All right, I'll see you soon.